Hey, what's up everyone? Trader Tim from eMiniMind here. Just wanted to do a quick video kind of talking about the week that we've had so far and where we might be headed in this upcoming week. We've got a situation where that's pretty common where we get a sell-off like this or even a spike. The same could be true for the opposite scenario, but we get a sell-off like this, we get a rally. In this case, we broke the 61.8 of the short, and then what did we do? We just kind of stalled out in this sort of horizontal support level. And from the bottom up, we have kind of a bull flag where we have a pole where the market, does 4 or 5 days kind of straight up, and then we have the flag, which is, these 4 or 5 days of sideways price action. Now, when we get into a situation like that, I like to make note of the low of that range, which we'll call these opposing tails here. So the low being 32.75 on the ES, and the high being 54.75. So a break outside of one of those levels should yield, some nicer, bigger trending days. And this week we have, had decent ranges, but really nothing too great, at least on the ES and the NQ. So as we head into Friday and then next week, I'd be looking for either a break of the high of the range or the low of the range. And if we break the low, I wouldn't be so um, surprised if we have another big, Dow 1,000 point down day or 500-600 points. Even if we come down here and break lows, it would be likely that we end up putting in, another hammer formation, or maybe we break lows with a big body candle, and then the next day is that, you know, doom and gloom day in the media, and then we get this candle, the hammer formation after that. The target on the short was a 24.50. A day where we close above the 61.8, you've probably noticed here that all of the bodies are within the failure level, the 61.8. No candle has closed above 27.43.46. So if we can do that tomorrow, that would be pretty bullish. Or if we break down tomorrow and maybe put in a hammer on in tomorrow's trade, that kind of leaves us about the same place we're at now. But as we zoom out, there's really not a lot of support until we get, kind of down here at the 2600 level is kind of a big round number. But then really back here at 2480, those highs could act as some support. In the meantime, if we do kind of move sideways here, we're in a situation where we have this widening formation on the intraday chart where we were a little bit tighter earlier in the week, and now we've made higher highs and lower lows at the same time. So if we do end up continuing higher, then we should have some resistance up here at 2800. If we go straight through, that would be a very, very bullish sign. I don't think that the market is necessarily ready to go straight up again at this point. If you go back to 2015 and compare, this price action to mid 2015, similar, kind of a V reversal, another leg lower after that. Enough time for, the people who, were chasing the market and some of the, speculation to be shaken out and people to kind of settle down from the initial panic and fear of another recession and all the doom and gloom stuff that comes out in the media when you have a correction like this. Once that settles out, then the market can go back to kind of its healthy chugging along. The volatility index is still very low, dipping below 20 again. So things are all right in the markets. This week hasn't really been much to write home about, but that's okay. It gives us what would then be a support level. If we move higher from this, then we could pull back to it, and we have these highs here that could be support, or if we sell off a little bit, then a bounce could then act as resistance. So a little consolidation is always healthy, and don't worry if you didn't have much luck this week. There was not a whole lot out there, at least that I saw in my own trading. So I hope everyone has a great rest of the week. Enjoy your weekend, and we'll talk to you next week.